and I ain't in no mix up. Just know that we doing it right. Step through the door like hello, hi. Bros outside, selling bag, going ham in West like Declan Rice. Do it like popcorn, everything nice. No way that we lose composure, no folding, we ain't doing it twice.
From the whole world, you know, it's actually mad. It's actually mad. Guys, so it's Monique again. I just wanted to make a mini video on how I process and break down and ingest my Hargreaves and Landsdown investment magazine. Now this is not a it's obviously not financial advice. It's just a video for those that would love to get into finance in some way, in a very small way, in a low level initially, but just can't get their head sometimes around the information. So I just wanted to help you understand how I process my Hargreaves and Landsdown Investment Times magazine. Now it's not financial advice, but I just wanted to basically make a video that simplifies how you could, a method that you could use to ingest some of the information that you get sometimes when you look at things like this. Because like me, you know, those that don't have a financial background or strong financial knowledge, sometimes it can be hard to ingest the information. So I just wanted to go through how I would look at a magazine like this. I'm not saying it's A-class information, but I am saying it should help you as a baseline to understand how to process some of this stuff, and even how to go forward and look for further information when you make your investments. Now with investing, right, actually let me do this in another video. Now with investing, the way to access, I guess, and I am not a financial guru, nothing like that. Please Google the things. But from my understanding, the way to access the direct market and to invest in your stocks, your shares, your mutual funds is to use, sometimes you can basically use a platform that allows you to do so. So you can use Barclays Investments Banking Service. You can also use who I use, which is Hargreaves and Landsdown. Now Hargreaves and Landsdown, so basically this means that I can search a stock, so I can search Apple, and then I can buy £100 or £600 or £20,000 worth of stock in Apple via Hargreaves and Landsdown, and I can do that via multiple products of theirs. I could either get a stocks and shares ISA, so I can trade stocks and shares in their ISA. Alongside the stocks and shares ISA, I can also get, you know, or I can just get a normal trading account. I don't know what they call that, but they have like a normal stocks and shares account that you can get with them. And then you can also get hold of a ZIP pension, which is a self-invested personal pension, I believe. Don't quote me, you have to Google it, but it's called a SIP. So basically it's a stocks and shares account, but it's a pension. So obviously you can only take the money out once you retire, but within that you can move and trade stocks basically. Now obviously accounts like this are, I would say, more recommended for more mid-term to long-term trading. So what you would want to do is buy shares within those accounts that you plan to hold for at least 5 to 10 years or more. It's not something that you can put in tomorrow. That means it's not the type of account, investment and trading account, where you put something in today and then you take out all of your returns tomorrow and go, I'm rich. You literally trade within it, and you focus on basically mid to long term goals. I don't know if anyone trades short term in accounts like this, but I personally, from my studies and from my knowledge, they're best for mid to long term stocks. So that's that. And then you have normal stocks. So you have, I guess, I can't break them all down in this particular video, and like I said, I'm not a guru, but it's just to give you a baseline if you really want to get your head around it. So you can have mutual funds. Now mutual funds are basically managed by fund managers. They're independent funds, but what they do is invest in multiple companies, countries, etc., multiple industries, and they create a pot of investments, and then you can then invest in that pot and watch it grow, dip, stay stagnant, or whatever it does. But you invest in that mutual fund if you like how they've invested their money and what their stocks have looked like over time. not financial advice. This is just how many do it and how it tends to work. You can also invest directly in companies, so you can buy stocks and shares in, for example, Google, Twitter, Nike, Apple. You literally just search their code. They normally have an abbreviated code. There's a name for this, I forget it, sorry. But you search the abbreviated code or the name in the search bar, and it usually comes up. Someone's making noise outside and I need to shut my window. So you can also invest in things like the FTSE 100. So that's FTSE, and that is the UK's top 100 companies. You can also invest in things like the S&P 500, which is the US's top 500 companies. I kept saying countries for some reason, but you can also basically over time watch your money grow as it sits. So basically, by following these these top companies, you can let your money sit and basically follow them as they rise over time, over a long period of time, because obviously they're the companies that are doing the best in those two places. Again, it's always open to dips, to falls. It never promises guaranteed returns. They always say that it's not financial advice, yada yada yada. But those are some of the main areas that people tend to invest in: companies, the UK's top companies, the US's top companies, and mutual funds. And then you've got things like commodities like oil, like gold, like silver. You can also invest and trade those as well. Anyway, that's enough. Like I said, I'm not an expert, but it's just so that's a little bit of an overview and a little bit of an insight. But what I really wanted to do today in this video was to talk to you about how I process the Investment Times magazine, because as I was looking through it, I knew that the average person, especially a young person that wanted to invest, and again, these are like long to mid-term investments, and sometimes not as volatile. And volatile meaning, they're not likely to bloody dip and you lose all your money. Obviously, you can never say never. But what I'm saying is, if you're investing safely, comfortably, responsibly, and you're aiming for long-term to mid-term growth, they always say, don't invest money you're not prepared to lose. But what I mean is, if you wanted to get into it and then you saw something like this, you might be like, what the hell is this? So I wanted to just talk about it and try. So this is, I think it's a quarterly magazine. I don't know what it actually is. I actually asked for this because they stopped sending it to me because I opted out, but I opted back in because I used to actually look at this to work out which funds I wanted to look at and watch and study and potentially put some money into. And again, you can start investing with as little as, I think, £50 or £25 a month. It's really not expensive to do. So anyway, so this magazine came from Hargreaves and Landsdown, who I have investments with, and it's called the Investment Times. I like the picture on the front. So as soon as I opened it, I got my highlighter out and I started highlighting things that I think would be helpful when I am basically looking at what to place some money in next. So let me just give you an example. Now again, a lot of these financial documents always state that they are not financial advice, but what I highlighted in this, for example, is mega trends have always been part of investing and bring lots of opportunity. And I also highlighted investors should be doing their best to spot them. This is true. Basically, when they say mega trends, they mean world trends, trends within communities, trends within social economics, trends within mega trends within the world, trends within investing itself, trends within companies, etc, etc, etc. People, what they want, what they like, how they're feeling. These are all things that influence the stock market. Sorry, my lighting's going a bit off, but that's what I highlighted here. Okay, so I've also highlighted being well diversified will help deal with the trends that don't catch on, that just turn out to be fads. So being well diversified means having basically a variety of things, or just a little bit of variety of things that you invest in, so that all your eggs aren't in one basket. For example, if you've invested in gold, but you've also invested in Apple, this is just a random example, gold might not do well over the next 5 years, but Apple might boom. So for example, that should balance out. If gold doesn't do as well, your Apple stocks may. So this is just an example that is not a fact. That is not a fact, but it's just an example of what they mean by diversifying. So what they mean is obviously having a smart selection, so that if something goes downhill, especially if it turns out to just be a fad, a new company that everyone's investing in, like CBD companies or something, and it turns out to just be a fad, then obviously your portfolio could balance out in other ways. You might have invested in mutual funds alongside that have diversified their portfolios and have loads of different things in them, and that balances your portfolio out overall. So that's what it means by being well diversified. And I also highlighted, as a reminder, over 100 years of data shows the stock market has beaten cash in 91% of all 10-year periods. There's no guarantee that this will continue, as unlike cash, investments rise and fall in value, so you could get back less than you put in. So all they're trying to highlight is that investing has stood the test of time with over 100 years of research. And again, you should always do your own research. This is also a form of research, but you should always do your own research. But stocks and shares have proven to stocks and shares have proven over time that they give some sort of a good return, as opposed to cash. And maybe they mean like cash inflation, or cash being in your bank accounts or something. So static cash compared to what you're investing, and people's investments on the stock market, and seeing the stock market basically rise. See, I'm not an expert, I don't know, but I'm just trying to help you understand how we would process information like this with a normal mind, if that makes sense. So now I got this page, and this page was interesting because it basically looks at the annual performance across major sectors. So those sectors include global sectors, UK companies, Japan, Europe, North America. Do I have America in there? It's some major sectors, like I said. So global, UK all companies, Japan, North America. I'm not an expert, but this is why I wanted to share this with you, because I'm not an expert. So as you can see, it's highlighted it year by year. So this is 2011 to 12, 12 to 13, 13 to 14, etc. and etc. And as you can see, there's loads of different colours. So this colour, for example, is Japan. So you can see this, and this is in order of who's doing the best to the worst, yeah? But you have to bear in mind that some of these, basically this 10-year period is not necessarily an indication of the next 10-year period, but it may be some sort of insight into how certain of these sectors perform over time, and some may stand the test of time for you. So you may find if someone has a sector has managed to stay afloat across these 10 years, that it may have a chance of staying afloat across the next 10 years. So that's what a lot of investors do. They look at past performance. You can't bank on past performance being an indication of future performance, but it tends to give some indication as to how something might fare up over time. So basically, if you can see something's done well over 10 to 20 to 30 years consistently, it may be an indication that it will continue to do well. Or also always bear in mind that something major could change or happen, or a major innovation could happen that puts that market or changes the look, how that stock, share, company or market may perform. So even though it performed wicked over the past 20 years, it was a VHS company. VHSs are now out of fashion because CDs have come in or something, or whatever, DVDs or whatever, and now that VHS company has gone downhill. So you can't look at the last 30 years, for example. So obviously be smart. But I just want to... So what I did was I'll just give you the example. I found North America did very well across this whole period. It had its dips. North America's the blue one. But you can see that it was at the top performer multiple times. It's been in the top 3 multiple times in this chart. It's had its dips, but for example, I would keep an eye on North America, or I'd look further into North America and find out why exactly they perform so well. Do they have a really strong industry that keeps them afloat? Do they have really strong companies that supply the world with goods or certain things? You delve deeper into this sector and basically delve deeper into research, but this is how you would narrow it down, by looking at something like this and understanding where your top performers lie, basically. So this is an example of how to process information like this, because you want to kind of look at what is doing well, or what consistently tends to stay afloat over time, even though there's a chance that it may not be an indication of future success, if that makes sense. So be smart, but that's how you'd process all of this information. For example, lastly, Japan looks good as well to me from this, but it's also quite volatile. So that means some years it was, it had a couple of years where it was, I guess, sitting towards the bottom, but mainly doing quite well consistently. So, but what you could look at, is one that maybe does tend to do well, but it goes up and down. So you would call it more of a volatile or more of a risky area to look at. So this is an example of how to process this information. If you see it all and it's all a jumble, you can just look at the patterns and work out which you feel would be suitable for you to research further before you invest. Now, some of these financial magazines, basically, they follow fads, they follow trends, they recommend things. I don't know if some of them get paid to write articles. I don't know if that's illegal, but I find that this is pretty kosher, so pretty trustworthy. None of this is financial advice, but I find it pretty trustworthy because it's just a generic, it's more of an unbiased financial document, if that makes sense. So the next article is on Asia, the rise of Asia. So what you want to look out for is also information about industries, sectors, companies, and stocks that may be interesting to look at or put in your watch list. So watch list is a thing where you can, within your Hargreaves and Landsdown account, you can actually watch stocks without having to invest physical money in them, and you can watch their journey over time, over 2 years, over 1 year, over a few weeks. So for example, I'll just give you an example of something I highlighted. There are already leading electric vehicle battery makers in Korea. So obviously the vehicle industry is a massive industry. More or less every single country in the world, I hope that doesn't sound ignorant, but from what I know, uses cars of some sort. So if someone's making electric vehicle battery makers, so we know that everything is kind of moving towards sustainable energy, potentially, and that Korea is now a leading electric vehicle battery maker. So they've said this in this magazine, and I've highlighted that. So you could research that further, and then you could even find, for example, this is how far you can go, an electric vehicle battery maker in Korea that you would like to invest in if they're already floating on the stock market. So that's how it works when you're basically, your mind is processing whether it wants to invest in something or not. I'm really not feeling this isn't even how I wear this t-shirt, and I've already done like half the video with my t-shirt like this, and I'm not actually happy about it. So I'm gonna have to do what I need to do, because this isn't even how I wear this t-shirt, and now I don't like it. You see that? That's so much better. This is me, this is how annoying I am at the moment, but it just is what it is. So yeah, this is better for me. This is better. That's a bit more me. Yeah, that's a bit more me. What was I doing? Hello? But yeah, that's the type of thing that you could highlight and then research further before you decide to invest. And then you find that company, you type that company in on Hargreaves and Landsdown, you get your £25 in your stocks and shares account and say, okay, I want to put £25 in here for the next 5 years. Let's see how it goes. So you're not expecting your money to go boom unless you're a really highly skilled investor. You are expecting your money, however, for midterm to long term to grow steadily. So, you know, whatever you have in there that you're putting in, you're expecting it to have some sort of growth over time. A lot of people aim for around 10 to 12.5% growth. Some people aim for 15, maybe more aggressively, but 10 to 12.5% growth is a good growing portfolio. Cool, you know, correct me if I'm wrong, but that's what I've learned. So for something else it says in this Asian article about Asia, some of the best companies in Asia are based in countries where the political and legal systems are more fully developed. These include Australia, Taiwan, and South Korea. I didn't realise Australia was in Asia. That's news to me. Okay, so the next article is about share ideas, and it's based on the ageing population. So it's a fact that between 2 years, 2015 and 2050, they're expecting the global population to age, which means a high percentage of people will be in a higher age range, basically, a more aged population. I mean, they always say this, do you know what I mean? So you've got to take some of this stuff with a pinch of salt. But they've recommended some companies based on that information. So this is not recommended, but just presented. You know, you can choose what you want to invest in or not. Because the population is supposedly going to be aging during these times, more people might be investing in basically life insurance. And it's basically, that's a suggestion. I keep saying basically, sorry. But that's a suggestion or potential idea for an investor to aim for life insurance companies as a potential investment. That's all it is. And I think they recommended also, like, I think hip and knee implants, a hip and knee implant company, and also some sort of health service where you can receive your pharmacies on the doorstep. So out of those three, for me, so for example, I'd be more likely to invest out of those three options in a life insurance company, because I know a lot of people invest in life insurance from all ages at this stage in life, just from my general knowledge and observation of the world myself. You understand? So you also want to take into consideration your own observations about the world and things around you and what you can see. So I actually think I'll leave it there, but I think that gives some sort of indication as to how the average human mind would process something like this when they know nothing about investments. I also highly recommend The Naked Trader. It's a book on investing. I love it very, very much, and it gives a nice overview, and it's quite funny as well. The guy that does it, he's a successful investor and trader over a long period of time, and he doesn't give you anything risky. It's very much to the point, and it has a lot of information in it. And also just reading, Googling and learning, and opening an account with one of these companies. I recommend Barclays or Hargreaves and Landsdown. A stocks and shares ISA or a zip pension, or just a normal investing account, but I would recommend a stocks and shares ISA first, because there's some benefits to investing within a stocks and shares ISA. But just researching, learning, but at least this gives you a bit of an idea of how to process it. It's not as difficult as it seems. It's not a get rich quick scheme. Your money's not going to blow up overnight in a good way, but it will grow over time, and you never know, you may even come across one company one time or one industry that may do really, really well and push your stocks up. But you just want to aim for slow growth, basically, over time. If you've got money that will just be sitting there in savings, it's good to do something like this, because you can grow it over time. And I know other people have spoken about this on YouTube. I'm no expert, but I just thought it might be helpful for people with intricate minds, just to understand how they would break down information like this and what they would look out for to make their own individual decisions for their investments. And if they're just starting out, if you're young or whatever, you can start, I don't know what age, but probably any age you can start at. I obviously hope it was helpful, and that, you know, we are all rich in the future, and we just got all of our investments, and we got all our things just growing and all of them thing there. I've just got a few. I've got a zip and I've got a normal one, and I've just got a few investments in a couple of companies and in just generic things and a couple of mutual funds. and a couple of mutual funds in my watch list. Things in my watch list have done really well, made all this money, but things in my zip pension have just grown over time. But it's in plus. I've grown my money over time, but just, you know, not massively the way all these get rich quick schemes and stuff talk about. This is direct long term and mid-term investing. So this is how a lot of people do it. And this is a great way to start investing, basically, and a good, safe way to start investing. Anyway, I'm sending you lots of love. Yeah, that's it. Goodbye.
So it's blatant, I ain't in no mix-up. Just know that we doing it right. Step through the door like hello, hi. Bros outside, selling black, going ham in west like Declan Rice. Do it like popcorn, everything nice. No way that we lose composure, no folding, we ain't doing it twice. Stepped in the place.